Hi and welcome to a Weekly Outlook. This is Kim speaking on Tuesday the 6th of February. So sorry, slightly late to this week, but it was quite good timing in some respects, I think. Having seen the biggest one-day loss on the Dow ever. On that basis, let's kick off the update for this week. Now, before I look at the doom and the gloom that's coming through there, let's quick look at key fundamentals coming out this week, particularly for the Forex market as much as anything else. But we've already had services PMI came in slightly weak on the pound, but still growth, but weak. The US figures came out good, showing that the benefits of some of the tax gains, whatever else, may be helping and going back in allegedly. He says. Draghi's speech yesterday afternoon. I really wanted to see what came from that, to be fair, hence before I actually recorded, because I was interested to see his tone. Now, his tone has stayed pretty firm there to the upside, and I was just wondering whether he was going to try and talk it off. He had his opportunity to be a dovish hawk, as someone referred to him as being recently. But he's stayed pretty hawkish, really. So that's that. In terms of the Aussie retail sales, they've come in this morning. In fact, they came in disappointing. I need to just update this. Let's just update this. They've come in disappointing data. There we go. Dropping off. And the trade balance negative there. And then we've got... we had the statement as well, all left unchanged, so no changes to the statement. Okay, later today, we've got very little out today. Trade balance coming out later from Canada, which is not a big mover. Leading into the rest of the week, the only real figures I'm looking then, we have got the Australian Reserve Bank of Australian Governor speaking, Lowe speaking at 9 a.m. on Thursday. That could create some volatility around the Aussie dollar without any doubt. Let's just check in terms of what he's supposed to be due to speak at the A50 Australian Economic Dinner. Okay, yep, volatility could come from that without doubt. As I say, mostly affecting the Aussie dollar. And then we've got the Bank of England inflation report, the official bank rate and monetary policy on Thursday. And this will potentially, particularly the inflation report, will possibly drive things here. But it's expected that the official rate will be left at 0.5. So there's no surprises due in store, but it will come. The tone of the summary and statement will set the picture for going forward from that. And then finally on Friday, we got a late statement coming from Australia there at 12:30 a.m. volatility for the Aussie. Manufacturing production key numbers coming from UK there at 9:30, and on its own again is the employment change. You often get quite a kicker around that CAD data. So there are some key numbers coming out this week. The general tone, I'm just sort of putting it into picture wise, is what we're seeing is growth worldwide. Through Europe, through the US still is showing this growth, and but there are some different cycles in terms of what's going on here. I'm not going to get into economic cycles, but in terms of the cycle of increasing interest rates, and there's still an expectation that the interest rates will continue to be increased in the US, and some of the financial easing will be reduced in Europe. So when we're looking at the pairings, I've got that in mind. The risk in the currencies, of course, for the pound is Brexit, of course, and May under pressure. So there's certainly risks with the pound still. With risks, the risks with the yen is we could see more money running into the yen if we see things like this happen. So sort of general big picture, and the Oz, if the dollar starting to gain in strength, we'll see commodity prices maybe coming down and the Aussie hit a little bit harder as well. Just a little bit on sentiment from the Commitment Traders report. The euro is very robust in terms of the analysis there. Looking at the orders are still coming in higher on the euro. The futures contracts are still higher, moving higher on the euro. So solid. In all other currencies, the yen also, the shorts are reducing. So the euro and the yen may be the stronger pairings or currencies to be working with, and the pound and the Oz may be weaker. And as I say, fraught, the pound is obviously got the Brexit risks. So that's the bigger picture in terms of the fundamentals, etc. What we're seeing here, well, flash crashes and everything else running through the markets. I'm not massively surprised that you don't see a bit of shock and awe. This is a weekly picture showing how far it's actually down. So the S&P, this is a cash index I'm looking at here, and it's certainly, it's broken quite a few trends there. Will we see some more selling? Was possibly. Let's just go to the futures and have a look at the futures this morning. See where we are with the futures. So the futures have followed through this morning, but finding a bit of support in the near term. Whether we'll see this pushing back up will maybe set the tone, and it will possibly set the tone in terms of money flows for currencies. The bond yields were rising like they're quite some extent over the last few months in terms of money coming away from bonds. These bonds, the yields dropped significantly, so money running back into it yesterday. The very fact that the big money's been, and there's a lot of money coming out of bonds, you just think, well, the potential for the continuation of this market is still okay, because obviously the bigger traders are still not wanting to leave their money in bonds, but they're being a bit squeezed here at the moment. So safety, we may see safety, i.e. money going to the yen, back to bonds, stroke the US dollar. So the dollar may get a bit of recovery from this. But if the risk comes off, the equity markets start pushing up, well then I would expect an overall movement of the dollar to continue in its sort of weaker stance. Now, okay, let's have a look at the, I'm really wanting to look at the currencies. And starting off with the euro. Now the euro's held up pretty well, and it did come off yesterday afternoon, and it's got the potential still to come off towards that monthly pivot there from the dailies here. It has held up well in comparison to most other things, and I still end up with a bullish view on it. However, open to this movement back towards the monthly pivot as we run through the week, maybe, and particularly if we were to see the markets crash this afternoon and through the next couple of days and then continue. Well, yep, we'll see the end coming off, euro coming off, and maybe even breaking that sort of level. At the moment, I'm sort of looking at that sort of level as a potential platform for possibly a buy, although it will confirm a lower high, so it has to be just be a bit careful if it comes down there. If it doesn't and continues to push up at 125 area, just above the 125 is a real key number. There'll be lots of orders, I should imagine, above this area. So if it does start pushing up, if people are shorting it now, those shorts will those buy orders that will be sitting up there will be a target. Okay. And it could give us a little bit of a butterfly sort of picture. I will say it does need to turn fairly soon to give us that though. Okay. Cable. So this was weekly view on the cable. Pushed out, and it's sort of broken that sort of upper trend line. It's as I've said many a time, that is the upper trend line has less significance than the lower trend line. But it was pretty much running in that channel. What I'm looking at now, though, well, I was thinking a week or two ago that we could be running into that weekly 200, but it doesn't look quite so likely at the moment, but things can reverse. At the moment, we're just seeing the dailies coming back here, but it has already confirmed a lower high. To me, it looks weaker. Still looking at its regression channel and how things move. It could come well back into that still. It's I've updated it in terms of positioning. It could come back towards that sort of level and eventually end up towards the S1 often. But let's just see if it breaks through. If it may just use that level of support. At the moment, as I said, it's put a lower high in. There is risk, and it can go both ways. There is, as I say, any sort of decent news coming through can just as easily see the pound fly, but it has held on well up until recently. As I said, it's broken a sort of near-term trends, and certainly on the smaller time frames, it's broken a few trends there, though. Okay, so just to summarise, the pound risk. Equals risk. Okay, dollar yen. Let's just come out bigger picture. This is where the money's flowing to, or one of the pairs it's flowing to at the moment. One of the pair it's flowing to. It eventually in the afternoon there, late afternoon yesterday, we saw the reaction. It did pitch up through part of the day yesterday, but anyway. Where we are on the weeklies here, there is this sort of key support level just over 108, I think, and maybe around that 108 area. A break of that area could eventually see the yen coming off. Now, I think if the S&Ps or the US markets and that's continue to roll through the next few days, weeks, we could see this yen coming right the way back and continuing that downward move. Of course, the opposite could happen. I mean, yesterday it did at one stage look very bullish on the shorter term time frames, but looking at this, well, the daily picture, really lower highs, lower lows. There are some, there is at least a trend line or two we should be drawing on here. Let me just see if I can get that back. In fact, I can take it from up here, and we should be keeping an eye on this sort of level across here. And now if it starts breaking through there, well, the S1, monthly S1 looks like a reasonable target to the downside, at least to start with. Upside, well, is still well, we'll see how it fits in here. At the moment it does urge with that we ended up with a daily pivot swing in yesterday, could end up with a bit more continuation. As I say, if the markets change course here altogether, US market starts rallying or whatever else, well, the yen will soon be given back. Aussie dollar taking a real kicker. Oil price coming off yesterday. Commodities generally get kicked in when we see oil, the US dollar, start increasing in value, and so we saw a couple of dollars come off of oil, I think it was yesterday, and we saw the effect. But to be fair with the Aussie dollar, it's been rolling a little bit. It put in a last week, it ended up putting that weekly pivot swing in, some weakness coming through and starting to show the cracks maybe. And eventually we've seen this trend change. There was a solid old daily trend there, which needed some sort of retracement. And I'm just going to have a quick measure here as I talk to you, and it's had a half decent one, almost a 50% retracement of what it's made in the last couple of months over the first week there, really, well, within 4 days of the beginning of the month there. So possible still downside. There's targets to the downside there, the 50, 200 maybe on downside targets. This could continue some more. There is no trend support as such for it from these time frames. In fact, I may have to come back and look at trend support here, and really there isn't. There's trend support's a long way away, sitting across the lows here. So it's really into its weekly moving averages there. The 21 still below it. Weekly 200 still facing south. We could, as I said, from that double top sort of situation, we could end with more of a sell-off there. Looks weak at the moment. Okay, Canadian dollar. I've got to put the caveat in, of course, of all of these. If the dollar starts kicking around again and selling, the inverse would be true. Right. Weekly picture first. Well, last week we saw the starting point really of a bit of a reversal. Bear in mind, oil was still doing pretty well. In fact, let's just bring the oil picture up here. Oil was still holding on, although okay, put a bit of a lower high, but even into this week, it was into the first day of the month rather, it was still pushing towards the upper side there. But when we come back to the Canadian dollar, we just see it as although oil was pushing up, it was still actually it was doing okay. Beg your pardon, I just got the dates wrong on that. That's fine. It was still coming off at that point. So where to now? Well, it's still strong with the commodity side, and it really depends on how the dollar moves and the US markets move here. If the equity markets start regaining some of the losses they've just made, well, we could see quite a quick reversal here, just as much as it's just pushed up in the last couple of days. But as I said, it's not been helped with that correction on the oil price. So looking at targets, upside targets of potential, well, it's already through its monthly R1. It's I mean, pivot wise, pivots, moving averages may be targets here at 20 the daily 50 there may still push up, but a break of that gives us quite a clear way. I'm looking for horizontal resistance potentially across that 26.64 area. So those prior lows may just come back into play somewhere in that region. The 50, that was previous highs are sort of sitting around by that 50, so may see a bit of a reaction to that level, but as I say, maybe last month's pivot was untouched there, and that may just provide some earlier resistance. So all in all, a very questionable market with what's going on. If you thought the US markets were in a bit of a turmoil, I thought it's worth just finishing off with one thought. Lucky you're not holding Bitcoin. Oh no, some of you may be. 65% reduction, downward movement, I should say. It's lost 65% since being on the CME there, so quite some drop off, although well, we're currently seeing a bit of a bounce, but it's had a horrendous time. So if you think the equity markets are getting struggling a little bit, well, there you go, there's always something worse. Right, have a great one. I'll be back next week. Bye for now.